Keith Fitz-Gerald is principal at the Fitzgerald Group. Tom Porcelli is the chief U.S. economist at PGIM, Fixed Income, and Dom Chu is also with us. Let me begin with you, Dom, to sort of set the stage for the conversation that will ensue here with Keith and Tom.
So the stage is exactly what Kelly had pointed out. There was the possibility, first of all, it was a 100% chance, based upon the Fed funds futures interest rate markets, that there was going to be a cut next week. The issue was whether or not it was going to be the quarter-point cut or the full half-point cut, and there's a whole debate about whether a half-point cut was going to signal something worse about the economy. What you got after the kind of mixed, although still generally positive, but mixed report from this morning, slightly hotter than expected month-over-month inflation when you strip out the effects of food and
core
energy.
Inflation.
Correct. Core inflation on a month-over-month basis came in 1/10 of a percentage point hotter than what consensus was.
Nitpickers.
Okay, so nitpicking.
Nitpickers.
Fair enough. But
real quickly, just think of it. If you do 0.2s annualized, that's 2.4. If you do 0.3s annualized, that's 3.6. So it does kind of have a big delta.
There's a cumulative effect.
Correct.
But again, when you're looking month-over-month and extrapolating the year-over-year, it doesn't often go in that linear kind of approach. So what happened was those interest rate markets had priced in this kind of 65-35 odds of a 25 basis point versus a 50 basis point. A slightly hotter than expected read maybe means that the half point is not justified. You can only really safely go a quarter point, and then you have to rework your financial models to get valuations to where you think they're supposed to.
So, Tom, the economist, what was it in the core inflation that drove that number a tenth higher than people were expecting? Yeah. Was it housing? Was it shelter?
Yeah. So can I first say, though, that I think the door was virtually closed on a 50 after Friday. Right. I mean, I think you
after the jobs
number. Report. I mean, I think you really needed a weak jobs report to really usher in a 50. And obviously that didn't materialize.
Well, it wasn't great.
You're preaching to the choir. I mean, I think that they're supposed to go 50.
Really?
Oh, yeah, definitely. I mean, I saw you.
I love how you're like, they should definitely go 50, but there's no way they will.
No, because I mean, this is the whole, idiom of what will they do versus what should they do.
Yeah.
And so I would love for them to go 50 because I do think there are cracks. I'd love for them to get to neutral much faster. But I think this is going to be a sort of a 25 basis point series of cuts until we get to neutral.
But let me nerd out on the core inflation number.
Yeah,
because I think isn't the core minus food, minus energy, both of which were flat to down, right?
Yes.
And shelter.
Yes.
Right?
Shelter would be in the core, but it would be out of the super core. So the core itself was reflecting that shelter component being
It was reflecting the shelter component, which remains the stickiest part of inflation. Am I not correct?
100% right. And I think that will always remain. And by the way, it's almost always the case that shelter is sticky. So I love that you mentioned supercore because I think it's an important idea. I actually don't happen to like
Only Kelly would know about supercore.
Well,
this side of the table would not know about supercore.
It's more when they start saying, well, okay, the core, but then you have to, by the time you take out enough things, especially that everyday Americans are feeling, they sort of go, I don't really care what the underlying inflation trend is at that point.
Listen, again, you're preaching to the choir on that. I don't like supercore. I think it's a disingenuous way of thinking about inflation because you're effectively stripping out 50% of the weight of inflation, and that 50% is deflating, and that's part of the consumable basket. So I don't know why you would want to strip that out.
The question is trend. So if we think that housing is divorced from the broader trend in the economy, I think that's the question after this morning.
So here, to me, is the right way of thinking about inflation. Forget about supercore, because again, I think it's a little bit disingenuous. If you just take headline CPI and you take core CPI and you strip shelter out of both of those, that will give you your underlying sense for what's happening from an inflation perspective. When you look at that, guess where they're running at?
2.1?
Yeah, it's 1.7%.
Well, yeah, but it's under 2.
Core, and it's
under 2.
1.2% for headline X shelter.
Wow.
Keith?
So to me, the inflation story, I think, for the
Keith, you've been nodding your head a lot. Go ahead. What do you want to say?
I feel like a bobblehead. I love the nitpickers. I love Tom's take on this because people are trying to overthink the unthinkable. To me, it comes down to the litmus test. When you go to the store and you see people pull out their wallet, do they have brand names or designer names? Are they filling up their cart or are they shopping for little bits, nits, and pieces? They're still doing the latter, so it's all about the wallet.
So what do you think the market reaction will be if we get next week that 25% or 25 basis point or quarter point cut? Isn't it all already baked in?
No, it's not actually, Tyler, and that's a very sharp question. You've got to go to Tom's point here. What should they do versus what are they going to do? My personal take is I think there's still an outside chance Powell does nothing.
Really?
Because the data about which he's being vigilant don't continue to perform the way he wants. So to me, I think the markets, this morning's whipsaw action demonstrates that traders have not yet made up their mind. And when they got data they didn't like, they, to Dominic's point, had to rejigger, reconfigure all those financial models because the cost of carry of all the leverage they used didn't go the way they wanted.
I would also put a point to go on the shelter side of things, because we do know for the CPI, it is a very large component. Roughly a third of the entire CPI is just shelter. There are already signs right now that in the coming months and quarters, you will start to see downward pressure on some of those shelter costs.
Thought it'd be here by now.
Right,
That's the thing.
it would be here now, but even with interest rates declining, there are signs pointing to a almost disinflationary or deflationary pressure on shelter and housing costs if you go into the first half of 2025 into the third quarter of 2025 as well.
On top of that, and we have to move along, but I will just layer, now look at what's happening with mortgage rates. So the 10-year has fallen, the mortgage rate is about 6.1, 6.2. If that puts upward pressure back on home prices, or I don't know if that would affect rents, does it continue to stymie that narrative? That, Tom, any
Well, I do. I mean, I think you could actually take the other side of that. I mean, I think you can wonder, if you do cut rates, does that actually allow inventory to
come back
into the
on.
market?
Yeah.
And then actually
bring
you can actually
prices
get some,
down.
Yeah.
Keith, finish.
There's one other point that hasn't been discussed yet, which is if you sell your house or if you reconstruct your house, what do you replace it with? So one of the reasons I think that number is particularly sticky is because people are just sitting on what they've got, no matter what it is.
Yeah, no, it's true. It's a big part of it. Shall we dive into some of the movers post-debate last night? Because that's another one of the phenomenon we're watching across the market today. It's not just all about CPI. Dom, in fact, we spoke briefly about some of the clean energy sectors getting a bit of a fill-up. I don't know if that's the whole story. There are people telling me they think the whole market weakness this morning was on increased odds of a Harris victory that gets people thinking about capital gain. I'm not talking about unrealized capital. I'm talking about actual capital gains taxes, rates going to 28%, selling some of their winners like insurance year to date. So there's a lot of different cross currents.
I think there's a lot of them, and you can't put a single factor model into putting any of these price moves. You have to put them in context, because many of these clean energy plays have been so beaten up over the course of the last several months that it could be any kind of a relief rally. It could be shorts coming off and taking kind of profits and covering those bets, and any number of things. But to your point, if you take a look at some of the hot spots out there, there's no doubt that within the S&P 500, it has been the big case here, clean energy type stocks. If you look at the upside, it's going to be Enphase Energy. It's going to be Sunrun, other solar energy plays. Albemarle, which is a battery lithium play, also one of the biggest moves higher. Meanwhile, you take a look at some other parts of the market, a direct corollary on what happened last night, arguably, is Trump media and technology shares, which have taken a bigger hit. They're kind of off their lows of the session so far, but if Truth Social, which is, again, Trump Media and Technology, majority owned by the former president, is starting to see incremental or relative downside moves.
Down 13% today, yeah.
Well, just
When does his
odds.
lockup end on that?
I
Soon.
mean, it's got to be. So again,
Very
it's not,
soon.
yes, and it's not just that as well. It's also the prevailing narrative about whether or not, again, from a valuation standpoint, traders are just rejiggering some of those assumptions they go into modeling how much these companies are worth. And by the way, I will also throw out there Bitcoin and crypto prices overall. We do know that the former president, Donald Trump, has been an outspoken proponent of cryptocurrencies. And when there is perhaps, again, a relative betting markets move lower in odds for the former president, it does take perhaps some of the shine off the cryptocurrency prices. So you're seeing some of that broad-based move as well.
Dollar selling off as well. September 19th, Tyler, by the way.
So September 19th is the end of the lockup. And it's a question as to how much, if any, he will sell. Because obviously if he sells a big slug of it, that's going to pull the
Downward pressure.
Oh, sure.
Put downward pressure. And a lot of supporters who put money in will there and then see that they
pressure
have,
as well.
they've lost money. Keith, let me turn to you. In light of the debate last night, do you do anything different? Do you sit there and you watch this and you go, oh, well, maybe I should lighten up here and put a little more there? Have you done anything, or is the debate not really a relevant marker for you?
That's an interesting question. It's not really a relevant marker on anything other than a short-term basis, because what I'm looking for is, if you imagine being Herschel Walker and playing football, one of the reasons he was so successful is because he was able to spot openings in the defense and then plow through them. So I look at the debate, I look at other events that make headlines around politics. do they create an opening that I'm interested in and in sectors that I know are going to profit despite it all? And if so, then I'm going to spring into action. But today, not so much. It's the usual names that I'm hunting down today that I'm very attracted to because they have the long-term potential. This is just another
Keith,
opportunity.
you got some NVIDIA capital gains, if I'm not mistaken. 28 versus what is it now? 20. It's currently 20%. Let's say you think on the margin she might pull it out after tonight. It goes to 28%. Would that make you think about selling it before year end?
No, and here's why. Again, and this is financial heresy, but to me, if I have to pay taxes, even though I don't like doing so, it means I've had a good year. So I don't worry about that. What I'm focused on is the growth. Am I going to get it? Is the company on task, on focus, and on mission? And if so, I'm going to continue to go with that. There are always tax mitigation strategies. You can manage that with a good accountant, a good tax professional. So not part of the buying process, but definitely something I think about when I get down the road, if I get down the road.
Heresy, like you said.
I like that, financial heresy. Love that.
Thank you all. Really appreciate your time today. Tom Porcelli.
No
Keith
nitpickers here.
Fitz-Gerald,
All right.
And Dom Chu.
But geeks and nerds.
Plenty of those. We got some breaking news on the Fed, in fact.